Well, hello, everyone. It's already April, and we're past April Fool's Day. I'm sending out a special video right now because you'd have to be on top of Mount Everest to not know what's going on in the markets. And I wanted to take some time to really recap what we do, why we do it. But let's go back to the basics, because it's really important that we remember why we do what we do, okay? Now, everybody watching this has probably seen this on my whiteboard. And what's important is the fact that we want to make sure that we've got our risk pyramid structured properly, where our safer investments, our moderate risk investments, and our risk investments are in balance. And then when we look at our buckets that we have in our 0 to 5 year bucket, liquidity for us to live on and do the things we need to do in the short term, then 6 to 10 year, 11 to 15, those longer term buckets. And these are where we have our risk investments. And why is that? Because as I've said many times, the stock market and investing is like walking uphill with the yo-yo. You're trending up, but the yo-yo's going up and down. And we want to make sure that we're structured in a way where we're not going to need to pull money out when the market's down, because the market is going to go down. You've seen this. We've looked at this many times. And this is just a microcosm of the patterns of bull and bear markets that are going to happen. There is no stopping them. The variable is the timing of it, okay? So just remember, total return equals income plus growth. And we're, in many cases, really focused on the income. And if you've noticed, that hadn't changed. Didn't change in 2020 during the COVID crisis when the markets crashed. It won't change now. So what we've got to look at is the fact that the equities market that's being impacted by the tariff discussions and negotiations, that our part of that is long term. So we're going to have volatility, but we've planned for it, okay? Now that we've covered the basics, let me give you my take. And those who know me really good, which is most all of you, know that I'm kind of a history buff and all. But I think it's important we get in touch with really what it's all about, okay? First off, a nation's wealth is really calculated based on its natural resources, its minerals, its oil, gas, farmland, that type of thing. Its capital infrastructure, which is plants, equipment, things that are manufacturing that allow us to build the things we need. Our labor force, which is us, it's the people that work. And then our currency, all right? And so when you put all four of those together, that's the main determinant of a nation's wealth. The reason we're having to go through all this with tariffs is over the last 40 to 50 years, all that's gotten out of balance. In our effort to find the cheapest products, we have moved our manufacturing offshore. The problem with that is that's where the infrastructure is. If you go back and you look at, they say that it was our economic engine that won World War II. Why was that? Well, it's because companies like Singer and General Motors retooled and started making planes and weapons and equipment, but we had the capital infrastructure here to just change molds and change course. We have sent so much of that capital infrastructure offshore, which means that is a major natural resource that in our search for cheap prices, we have made that compromise, and it's paying off in national debt, in deficits, in all that. It also means if the plants aren't here, the labor force isn't here. So it's gone to places where there's no EPA, China, for example. There are no labor laws. Things that they do over there to build a cheaper product, people wouldn't even begin to tolerate over here, but yet Americans have been buying those products. So in currency manipulations that go on with our trading partners, so a lot of this over the last 40 to 50 years has gotten totally out of whack, which is why our debt has exploded and that our labor force has shrunk. And that's the attempt, I think, with the tariffs to change that. It's going to be a long process because it was a long process doing it. It's going to have some pain. There'll be some rewards in there too. But just remember, back in 1981, as we were coming out of the 70s with the hyperinflation, and Reagan started implementing his policies, we look back at that now and go, wow, well, I remember that because I was paying attention back then. There was a lot of pain going on because they were having to shrink the money supply, significantly raise interest rates. 10-year Treasury got over 15% for a short period of time to slow down the inflation monster and get our economy back in whack. In fact, David Stockman, his budget director, kept telling Reagan, you need to change course. You need to change course. This isn't popular. This is hurting people. And Reagan said no. Well, by the end of 82, it was turning around. 1984, he won 49 states because the economy had turned around. Okay? So, again, what we're looking at is the rebalancing of what has gotten out of whack so that our children, our grandchildren, can have the long-term growth that we've experienced and benefited from and can again. Now, I'm not trying to get into politics here. I'm just talking about basic economics, okay? And so we come back to the basics. We want to make sure that our structure of our investment plan takes into account our risk pyramid, that we have our safer investments on the bottom. That's our foundation. Our moderate and income-oriented investments here in the middle. And then our risk investments, stock mutual funds that we're seeing fluctuate now in this kind of the tip of the spear, so to speak. But we make sure that we've got plenty of liquidity in the right places for the right needs that we're projecting out, and even those that we're not projecting, those emergencies. So again, total return equals income plus growth. That's why our focus is. That's why the retirement income source is our name, is because income is our middle name. Now, everybody knows who Warren Buffett is. And I was reading an article where he was saying, keep your head. And he said, everybody ought to go back and read this poem. Well, it just happens to be one of my favorite poems by a gentleman by the name of Rudyard Kipling. And I think we'll just take a minute. It's not a long poem, so bear with me. But it says a lot about a lot of things. And that poem is called If. And it goes like this. If you can keep your head when all about you are losing theirs and blaming it on you. If you can trust yourself when all men doubt you, but make allowance for their doubting too. If you can wait and not be tired by waiting or being lied about, don't deal in lies. Or being hated, don't give way to hating. And yet, don't look too good nor talk too wise. If you can dream and not make dreams your master. If you can think and not make thoughts your aim. If you can meet with triumph and disaster and treat those two impostors just the same. If you can bear to hear the truth you've spoken, twisted by knaves to make a trap for fools. Or watch the things you gave your life to broken, and stoop and build them up with worn out tools. If you can make one heap of all your winnings and risk it on one turn of pitch and toss, and lose and start again at your beginnings, and never breathe a word about your loss. If you can force your heart and nerve and sinew to serve your turn long after they're gone. And so hold on when there's nothing in you except the will which says to them, hold on. If you can talk with crowds and keep your virtue, or walk with kings nor lose the common touch. If neither foes nor loving friends can hurt you. If all men count with you, but none too much. If you can fill the unforgiving minute with 60 seconds worth of distance run. Yours is the earth and everything in it. And which is more, you'll be a man, my son. So if we keep our heads during this and understand that our foundation is what helps us through this, then we'll be all right. So I want to thank you all for being clients Again, if you got any questions, give me a call. I know everybody's in the process of coming in for reviews, and I look forward to seeing you soon. And one last message. I wish everyone a happy and blessed Easter.